Hey there traders, welcome back to the video today and thanks for joining us. I hope you've had a great weekend. So it's Sunday pre-market time, September 14th, 2025, and we're staring down a week loaded with opportunity, absolutely stacked with opportunity. So over the weekend we got more labor news softness, ORCL's AI backlog blew minds, Fed rate cut odds surged and consumer confidence slipped. So today we'll recap all of that, get clear on what's likely to move at the bell, and stake out 3 trade setups to capitalize on. So everyone, let's light it up. Talking about the weekend recap, there were some key headlines that we need to go over today. Firstly, jobs and labor weakness. US job growth was revised down from 911,000 jobs over the past year. August only added 22,000 jobs, so jobless claims surged to 263,000, the highest weekly level in nearly 4 years. That's not great at all. Now, talking about consumer sentiment falls, the University of Michigan survey showed sentiment dropped to 55.4 in September from 58 in August. Both current conditions and expectations fell. Inflation worries and job stability were a big drag. Inflation worries and job instability were a big drag. So next we're talking about ORCL. There we go. ORCL reported Q1 financial year 2026 results. Cloud infrastructure revenues up 55%. Its remaining performance obligations skyrocket to $455 billion. Up 359% year on year. It expects demand to keep growing, giving its AI cloud-backed business a powerful tailwind. Alright, next talking about Fed rate cut expectations. So, with job market faltering and inflation still sticky, markets are almost certain, around 90%, that Fed rate cuts will be 25 BPS at its meeting on September 16 to 17, 2025. So our broader market mood, stocks wrapped up the week near highs. Wall Street posted its best week in 5, but there's fatigue under the surface. Inflation prints mixed, labor data soft, oil supply and demand concerns, and rising input costs for some sectors. So we got to keep our radar tight. Here were those figures that we were talking about earlier. Okay, let's talk about the macro pulse and what it means for Monday's open. Here's how all that front lines into Monday. So bond yields and rates. The labor market softness and downward revisions paired with inflation mixed prints and ORCL's strong cloud backlog are pushing yields modestly lower. That supports growth and tech into the open. But if CPI components come in hotter or import tariff impacted items spike, we could see yields pop back up very quickly. Then inflation pressures are still alive. Core inflation is tricky and sticky. Services inflation, import prices, and used input costs are still pushing up. Markets may look past some inflation, but one strong inflation surprise could undo risk sentiment super fast, traders. Next, demand concerns and sentiment traction. Consumer sentiment falling means discretionary may be... I've actually got an article about that over here. Yeah, that's the one. So consumer sentiment falling means discretionary may be volatile. Investors who moved into growth and tech will be watching whether weakness in jobs and sentiment translates into real demand weakness. Then lastly, the Fed meeting on deck. Because the Fed is meeting midweek, expect cautious positioning. Traders will front load expectations into Monday, reacting to every macro release that hints at inflation trajectory or labor softness. So Monday's open could be strong if risk tone holds. And if we get early confirmation from futures or yields, but vulnerability stays high, be ready to adapt very, very quickly. Okay, now talking about sector rotation and what to back Monday morning. Here's where money is flowing or likely to flow and what sectors deserve your focus. So talking about AI, cloud and tech leaders, ORCL's backlog shows enterprise demand is heating. Names in semis, cloud infrastructure, AI inference should benefit. NVDA, ORCL, Broadcom, maybe even cloud platform players. Second, growth names with earnings power, software, SaaS, recurring revenue businesses that show margin and guidance will be in favor. Third, healthcare and defensives growth. With labor market wobbles and inflation risk, healthcare tends to outperform when macro feels shaky. Pick leaders favorable biotech and pharma names. If consumer sentiment weakens further or inflation surprises upward, retailers could get hit. But if import tariff costs ease or show signs of improvement, there's upside in high quality consumer names with strong margins. However, energy looks more risk than reward if inflation remains firm. Lastly, financials. Risky in this environment, lower rates may help mortgages, but yields and credit spreads matter. If banking leads, it'll be an early signal, but don't chase weak names first thing. Okay, 3 trade setups going into Monday before the bell. Firstly, NVDA. So AI cloud names, any of them are a good option, but a long path for NVIDIA would be tech leaders that held recent pullbacks. So NVIDIA is well positioned. If they show strength early and trade above opening range high and volume, you ride with them. Then a fade or rotate path. If inflation surprises in CPI or tariff announcement, this group may face downside. NVIDIA is part of that group, so fade into the rallies. Then the second one we're going to look at is Oracle, ticker symbol ORCL. This is what we've been talking about in the news. So a long trigger for Oracle would be pre-market high hold plus strong futures quotes plus good volume after open. If ORCL gaps up with strength and holds VWAP, that's your entry. Then a risk cutoff. Fails VWAP early or weak semi, tight stop under major support zones. Alright, those are our 2 trade setups. The last one we're going to look at is XLV. So this is healthcare. If XLV opens strong, follows through early with breadth in the sector, that is our long trigger. So remember, this is ticker symbol XLV. Then an alternate path. If macro gets shaky, these names may act as a safe haven. Even small dips could be entries. So bonus idea would be a sentiment play. Consumer sentiment is weak. 1 or 2 retailers may pop if they report some strong same store sales or guidance. But expect volatility, no weak names first. Alright traders, then in closing today, our execution and mental edge. Use pre-market levels, VWAP opening range to guide entries. Don't chase overnight gaps with confirmation. Scale in on breakouts or strong retests. Always respect invalidation or stop loss. If a trade goes against you early, accept it. There will be others. Watch butterflies, macro leaks, CPI components, tariff news. Those tend to trigger knee-jerk trades. And keep trade size moderate Monday morning. Morning volatility can be deceptive. So our closing fire today is labor is weakening, inflation is mixed, Oracle is slaying with AI backlog, and Fed cuts are almost baked in but not guaranteed. Sentiment is cautious, but upside is being priced. Sectors to favor right now: AI, tech, healthcare, and defensives, and hedge via gold. Energy and low margin sectors carry risk. Get your alerts ready. Start Monday with structure, patience, and confirmation from volume. The tape is giving clues. Let the door open, then walk through. Let's make Monday count. Here we go. See you then, traders. Take care.